The market moves have been fascinating this week. Let's bring in Alan Knuckman. He's a chief market strategist at St. Paul Research. Good to see you, Alan. And what's your trader talk on this market?
Hello, Angie. Stocks are still sideways. They've been stuck and they've slipped a little bit after that March surge.
Time to track your trades, Alan, and you had a recent win in AT&T.
All right, our sell in its strength strategy has sold 3 100% winners last week. So that was a good start. Our current plays aren't as much of a concern because they're for June, July, August, and further out. But we want to focus on the macro market. One thing of note we've got to pay attention to is we've got an AT&T option for June. We sold half the position with a 50% gain. We've got the other half because they did have an adjustment with that dividend.
Alan, tell us about your new trade.
All right, a trade trigger for this week, GDX, mining gold, the gold miners. Now, gold itself came all the way back down to its $1,900 support. So that's a very strong sign that that held once again. It's making another move up. We'll see if it can break through 2,000. So if we look at GDX, this has traded between 30 and 40 for the past year. A breakout targets 50. Now, 35 is the midpoint of this 1 year range. So it's a super support level to lean on. And like I said, a breakout targets 50, and we were up to 60 back in 2011. So there's still some more upside. The play here is the GDX September 35, again, that midpoint support, 35 call, and it's going for about $7.50. It's now $6 in the money with the stock at with the ETF at about 41. So it's a deep in the money call, 5 full months of time for that option to develop on the upside. So I like the risk reward. It's set up nicely. And let's see if gold can get a start again, because if you look, you saw crude oil come back to its breakout and then bounce. So you could see that in some of these commodities markets.
What are your trading day takeaways?
All right, trading takeaway number 1, the season starts. Fundamentals, finally, that's what we've needed here for this marketplace. Let's see what the next move is in the market. JP Morgan announced to kick off the season, they announced that they made $8 billion in pure profit for the quarter. So that's a nice, healthy chunk of money. Number 2, techno dance. Technology stocks had a 15% surge from the bottom, but then they've slid. So now we're back to the 14,000 level. So it's important to keep an eye on. We've been trading between 14,000 and 15,000. A breakout target 16,000. So there's a lot of upside, but let's see where we can hold here at this support base. And number 3, midpoint magnet. All right, after the big stock surge, the S&P has sold off to its critical 4450 level. Now, 4450 I've talked about week after week after week, because that's the halfway point from the drop from the top, the January 4th highs to these swing lows. That was important on this last bounce that we got above it, and now it's important that we're a little bit below it. Watch that on a weekly basis. That's going to give us our keys to the future. So what we want to do here, as always, let's let the market show us where it wants to go.
Good plan. Let the market tell you. Thanks, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.